3 days. That is how long it took a trader I mentor to lose $400 on his very first live account. He had never opened a demo account, not once. He did not know what a spread actually cost him. He did not know how his broker's platform filled orders, and he found out with real money, at the worst possible moment. We are fixing that mistake before you ever make it. This is about the demo account, not as a toy, but as the one piece of preparation that decides whether your first real dollars survive contact with the market. So what actually is a demo account? It is not a simplified toy version of trading. A good broker builds it as a mirror of the live platform. Same charts, same order types, same execution speed, same news feed. The only difference is the account balance is not real. You place a buy order on Eurodollar in demo, and the platform processes it exactly the way it would with your real card on the line. That is the whole point. You are rehearsing on the actual stage just before the actual show, which raises the obvious question. If this costs the broker money to run and costs you nothing, why would any business give this away for free? Brokers are not running a charity. A demo account is a funnel. They give you a free, fully working simulator because comfort converts. Once you have spent weeks clicking buy and sell, watching your equity curve move on their charts, you are far more likely to fund a real account with that same broker than with a competitor you have never touched. The demo is marketing dressed up as education. That does not make it bad for you. The tool is genuinely useful, but walk in knowing the broker's goal is your eventual deposit, not your eventual profit. Those two goals only overlap if you actually learn something first. So let's talk about what you're actually supposed to be learning down there, risk-free. Here is the actual purpose of a demo account, stated plainly. It lets you break things without paying for the damage. You can test a stop-loss placement that turns out wrong. You can misjudge a lot size and watch your account swing harder than you expected. You can fat finger an order at 3 in the morning. On a demo account, every one of those mistakes costs you nothing. On a live account, the same mistake costs you your grocery money. The trader I mentioned earlier skipped this step entirely and paid full price to learn something he could have learned for free. But here's the harder question nobody asks. How long should you actually stay down there before you're ready to go live? There is no fixed finish line, and anyone who gives you an exact number of days is guessing. But there is a floor. Give yourself at minimum 1 full month on demo before you even consider going live, enough time to sit through several different sessions and see your strategy tested more than once. The real benchmark is not time though, it is results. You should not open a live account until you can show yourself a run of consistent profitability, not one lucky week, but a pattern you trust. For some traders that takes 2 months, for others 8. The calendar does not care. Your equity curve is the only judge that matters. Coming up next is the piece that actually saves your account before you go live, which pair you choose to practice on, and why that single decision changes everything. Pick one major pair and stay there. Eurodollar, dollar yen, pound dollar, any one of the big majors, and resist the urge to bounce between 5 pairs while you are still learning. Here is why majors specifically, they trade in enormous volume every single day, which means liquidity is high. High liquidity means the spread, the small gap between the buy price and the sell price that the broker keeps as their fee, stays tight. It also means slippage, getting filled at a worse price than you clicked, is rare. Trade an obscure exotic pair while you're learning, and you're fighting a wider spread and unpredictable fills on top of everything else. One pair, tight spread, fewer variables, that is how you build a clean habit instead of a confused one. But none of this means much until you actually see it move, so let's pull up something real. This is a live Eurodollar candlestick chart, right now. Pause for a second and look at it the way you would in demo. Check how tight the gap is between bid and ask in your quote window. Watch how a candle actually forms and closes compared to what you expected. And notice how price behaves differently as one trading session hands off to the next. That handoff, London closing, New York picking up, is exactly the kind of shift you cannot learn from a textbook. Only from watching it live. Guess before I said, do you think spread and volatility usually widen or tighten around a session handoff? If you guessed widen, you're right, and that is precisely the kind of context that matters more than any pattern shape on the chart. And that context keeps changing underneath you, which is the next thing you have to train for. One more reason a month is a minimum, not a target. Markets do not hold still for you. The behavior you practiced in a calm, ranging market will not survive the first genuine trending week. and a strategy built only during high volatility gets chopped to pieces the moment things go quiet. Demo time is where you deliberately go looking for both kinds of conditions, instead of getting comfortable in just one. If your only experience is 3 flat weeks, you have not tested your edge, you have tested your luck. Adjust your rules as the market's personality changes on demo, while it costs you nothing to be wrong. But there is one variable no demo, no matter how good, can fully simulate for you. Now the honest limitation, and this is the payoff this entire video has been building to, demo trading cannot fully prepare you for one thing, the feeling of watching your own real money move against you. On demo, losing a trade stings a little and you move on in 10 seconds. On a live account, that same loss triggers actual fear, actual hesitation, the actual urge to chase it back. No simulator can fully replicate that pressure, because your brain knows, somewhere, that the demo money was never really yours to lose. So going live will still feel harder than demo ever did. That is normal, not a sign you did something wrong. It just means the demo handled the mechanics, and now you have to handle the mind. Let's land this. A demo account is a mirror of the live platform, not a toy. Brokers give it away because comfort eventually converts to deposits, and that's fine, as long as you use the risk-free time to actually learn, minimum 1 month, ideally until your results are consistently profitable, on one major pair for a tight spread and simple habits, tested across different market moods, knowing the emotional weight only shows up once real money is on the line. Remember the trader from the start, $400 gone in 3 days, 1 honest month on demo first, and that same mistake would have cost him nothing. Here's a rule worth writing down. Amateurs count how many pips they made. Professionals count how much risk they took to make them. Real profitability isn't a demo trick. It's hard work, patience, and good judgment applied over time. The demo just gives that work a safe place to happen. Tell me in the comments which single pair you're choosing to practice on. Next time, we take the account you've now prepared and build the actual risk plan that decides your position size before you ever click buy.